Jennifer, maybe the first question for you. Sorry, we've got to share the microphone on this section. So where do you see the most impact from the insurtechs which you see? You probably see more than most coming through the Munich Re system. I think you help people with the provision of capital, but you also use insurtechs in your own business. So where do you sort of see the biggest impact at the moment?
So my role is to actually be the first point of contact for before it was the insurtech, but now anybody who wishes to start selling insurance products to the market. So being the first point of contact, I've seen many propositions. So in comparison to last year, I am really happy to say there has been a lot of progress. Last year there was this hype, so everybody who have heard about Lemonade and they have a bit of an entrepreneurship spirit, they will come up to us and pitch their proposition. And very often these propositions were not really strong, and people didn't realize how hard it was to actually become an MGA or to sell insurance product or to crack the insurance industry. And the proposition at the last year were very much concentrated on the engagement phase. So they thought that just by engaging with the customers, they'll be able to have an impact, they'll be able to make a name for themselves. Some of them did, but it was much more than just a customer engagement. But throughout the months, I think the people have realized that just creating a good engagement will never get them very far. So the proposition have really been, I suppose, much more concrete now and much more solid when they come to us. We have seen the companies, the startups, now thinking along the whole value chain. So they know they need to engage with a customer, but they also know that they need to retain these customers and to select the good customers. So they are really employing much more technical facilities to do that. And they are also just thinking the whole journey. Before it was much more on the front end. So now they're also thinking on the claim side. Because for me, it was always the most important thing. Anybody buy insurance because they want to be paid. That's the only reason anybody's buying insurance, because they want to be paid whenever an incident happens. So the propositions now are looking at the whole value chain, from the acquisition, from retaining the customers, from innovating the claims journey, but also what they are doing is understanding how, like I said, how hard it is to crack the market, but also how expensive. Before, I don't think they realized how expensive the customer acquisition cost will be. So now that we have realized that, we're also finding ways to really improve the whole value chain and to make the business sustainable. So that's on the personal side. So this is something that has been happening. And what we see even more progress on now is that these propositions are moving to the commercial insurance side, and which is, for me, very exciting, because cracking the commercial insurance side means that they have to have much more insurance knowledge. So now we are seeing people with strong insurance background really teaming up with people with a tech background and creating propositions that, for me, hopefully will really innovate the insurance industry. So I see progress both in terms of the personal lines, people understanding what they need to do, people now venturing onto the commercial insurance. And as I think, Chris, you mentioned that for digital partners, we are partnering with people who has a distribution play. So they are creating products, insurance products that they are planning to sell to the market. And now they realize that just creating a good product isn't good enough. So they're coming to us now with a very, very good distribution strategy. And for me, that's where I see the progress happening. They are really understanding what it takes to be a sustainable, a profitable business in insurance.
Great. And Dylan, I think maybe this is one where you might want to comment, because you're very vocal, I think it's fair to say, about the fact that you're not just distribution, but thinking about what happens after someone has bought a product.
Yeah.
So do you want to maybe pick up Jennifer's comment there and explain what you're doing and how you think about that?
Yeah, absolutely. So we set out actually to solve the fundamental problem that exists for consumers in insurance, which is they don't trust insurance companies. They trust them less than banks, and banks are blamed for financial crisis. So That's why I wrote about this a year ago, saying how frustrated I was that most of the insurtech was all about distribution, because if you're not actually controlling the customer experience from purchase to claim, you will never address the fundamental two issues, cost and claim experience. And so that's what we set out to do, and that's what we've done with social. So what does it translate? In terms of better insurance, to give you an understanding, our claims NPS is 79. Unheard of. And in terms of cost, you can get up to 80% money back every year if you and your friends don't claim. And by the way, you'll start off with a very competitively priced policy, so it's not as if you're recovering. So it's better and cheaper. So addressing the fundamental core issues, and to do though, we had to redesign the entire value chain and the entire customer experience from purchase to claim. So we kind of own that whole customer experience across the board, which, as you rightly pointed out, is a lot harder, which is why fewer people engage in that. But we are passionate about actually solving the problem rather than just trying to scavenge a bit more of the margins in the value chain.
Cool. And Fleming, on the basis that you're going to get the microphone next as it goes up the line, maybe you could comment on how you're addressing that at Nimbler, and then we'll hear from Tim at the end on the same point.
Sure. So yeah, I agree very much with what Jennifer and Dylan have just said. You do need to have insight into the whole process from start to finish. And for what we're doing, speed is absolutely critical. And in fact, a lot of what we're doing on the distribution side is we're not coming at it from an insurance angle. We don't start with insurance. Certainly when I started doing my first bit of market research into the idea, the first thing that we realized is that the second that anybody thinks you're selling insurance, the door gets slammed in your face pretty fast. But what we're trying to do is solve a problem. And that problem for us is bad debt for SMEs. For them, the problem is speed of being paid. And what we're effectively trying to do is to say that you have we help you to get paid. And that means, for us, that's fantastic if you do get paid, because we don't have a claim. But it also means that we've already provided a service that's valuable to our customer. But when you do have a claim, what's very important for us is that we already have all the information that we need to get that claim paid as soon as possible. Because when you're in that situation for an SME, the problem is it's cash flow. That money has not come in the door, and you need that money fast, or your business is going to suffer. Or indeed, you may have to get a loan at very high rates, and so on and so forth. And it's all cyclical. I think you've got to work in the data that you're bringing in through the technology in order to improve the processes. But it's also the importance of actually being part of the distribution is that you get to talk to your customers. You look them in the eye and you can see whether it works or not. And one of the sort of really revolutionary things that I think has happened in the last few years is actually the product development cycle. And that means that we can go out there, we talk to the customers, and if they don't like what we're proposing, we don't build it. Right? You've got to focus, like you say, and that is the way that you can maintain that focus.
And can you just give us 30 seconds on exactly what your product does?
Sure. So we integrate with cloud accounting. They will see a very simple dashboard of their accounts receivable, and they can click and insure a single invoice if they want. And by doing so, we will optimize their credit control, which will hopefully speed up the time by which they get paid. But on top of that, we automate the risk monitoring, the debt collection, and then, of course, the claim itself.
Okay, great. And Tim, so you're selling, I guess, products to the on-demand economy. How important for you is the access to those target customers versus how you differentiate yourself once you've got them in the door?
Well, where we are right now, we're writing in, I think, 25 states now, and we're in the U.S. We're setting up shop here, going through the licensing process. But we're sort of moving into the, we think we were able to pull off the innovation side, so we sort of, pretty sure that it's not a hallucination and it's a vision. But now we're worried about scale. So now we're worried about how do we now get to scale, and things that you do in your MVP and your market fit become gaping holes when you start to scale. So now we're sort of getting into the how do we scale, and the biggest problem is it's very difficult for us to scale. I think people talk about acquisition costs being very, very high, too high for a startup to be able to afford. So what we're looking for is ways that we can cheaply get to the Airbnb hosts and Uber drivers, but we're very focused on them. So we're looking for, we're focused primarily on execution scale. I'm not sure I answered your question, no.
No, I'm not sure you did. But so do you do things with your proposition which is different to what you would get if you were buying a normal motor policy, for example, if you're an Uber driver, or is it a relatively standard product
Sure.
that's customized to the peculiarities of that segment?
Sure. So we focused on, we wanted open field. We didn't want to go head to head with Geico and Progressive and spend 15 minutes and save 15%, and they're spending $1.6 billion on advertising. So if you pick our HomeShare product, which is a homeowner's product, the HomeShare product, we thought you had to go further. We didn't want to take your great-grandmother's homeowner's product and magically make it digital. We didn't think that was possible. So we designed a brand new form, working with Munich. So when you're in the on-demand economy, you're a person, you tap on the button, you become a business, you tap on the button, you become a person again. Insurance industry likes to separate us into commercial and personal. These people are both. They're using their personal property to act like a business. So we created a new form. So it's a commercial liability, $2 million in commercial liability sitting beside a personal property. And then we wanted to do a few other things. We wanted to remove all of the insurance transactions, so we don't have an application for insurance. We only have 2 transactions, register and buy. We collect premium into our bank account. We pay claims from our bank account, so we have underwriting authority and claims authority through the full process. But we wanted to come up with an insurance policy that handled that period of time which is full primary non-contributory, so we take over full risk, but it's a hybrid policy. So it's focused, and there's about 18 coverages specific to either the driver or the host. So it's very, very tailored homeowners and auto policy. Maybe that answered the question.
That does.
Yeah.
Thank you. Can we maybe bring in Chris? So, Chris, you're someone else who looks at a portfolio rather than an individual insurtech as well. And I guess it's fair to say that there's something of a debate, if you like, although it's not heavily debated, but a question around whether insurtechs, which are trying to sort of change the way you engage with insurance, are going to be successful, or if the ones that make it really easy for you to get insurance is going to be successful. So an example might be, something where you've got some sort of concierge proposition. You have to upload your policies and then see where you're overinsured or underinsured versus just getting it in 3 seconds. Do you sort of see any evidence from the businesses that you've been looking at about where customers really feel like they want to buy policies?
Yeah, I'd say there's still a huge diversity to answer that question with any real substance. I mean, just quick intro. I mean, so what we're seeing, we're acting as an incubator for startup MGA businesses. So we have 23 different startups which have a vast, diverse activity in terms of distribution, product. The fundamental business mix is very, very different. So in our portfolio, I think about a third fall in the broad category of insurtech or technology-based businesses, and the rest are sort of more traditional mainstream. But to come to your point, I still think that there is a huge opportunity out there, and there's huge change going on, and we're still seeing just a massive, diverse group. And I think one of the sort of debates we're having with, with Dylan recently was to do with this distribution point. And I think, although it wasn't necessarily aimed at me, you know, a lot of the propositions that we look at are brilliant, still brilliant ideas, and they're still self-contained, excellent propositions, but they need an awful lot around them to make something happen. And the point that I always drill down on is this issue about where does the first sale come from, and then how are you going to get to that customer? And again, it's a simple point, but there's a lot always, or very often, there's a lot missing in that distribution point. So let's explore distribution a bit more, and let's discuss where that sale is going to come from. And I fully accept Dylan's point that what Dylan's built is a totally integrated business. That is extremely hard, and bolting all of these different elements together is easier said than done.
So I guess on that distribution point, one of the challenges is that if you are pretty much any other business in the world, let's take the cliche Amazon, once you've got a customer, you can sell that customer one product after the other, and then you've got your one-time customer acquisition cost, and then you can ramp up your average revenue per customer, which I guess in insurance is much harder because people don't get so excited about buying a car policy that they then want to buy a home and gadget and 15 other policies which they never wanted before. Do you sort of worry that distribution has this sort of fundamental challenge that you can only grow by acquiring new customers rather than increasing your customer premium density?
Yeah, I think one of the biggest problems that I think you highlighted in your earlier presentation is to do with the fact that insurance is a simple word and you think it's a simple product, but you know, unfortunately, it's a regulated business in a regulated world, and it just isn't that straightforward. And I think it's difficult to really get across to people that it should be a lot easier, but in most parts of the world, if not all parts of the world now, that there is a heavily regulated environment. So you're into a local regulator looking at the conduct risk, looking at the way that the customer transaction is built out. And that is a real pain, and it creates huge complexity, which just fundamentally maybe shouldn't be there. But as things have gone wrong in the UK financial world over the last 20 years, more and more regulation has been built in. So even though, going back to your original point, even if you've got the customer, and Amazon's quite a good example because we've had interactions with Amazon over the last 6 months, but their expectation about what they can do is quite difficult to marry into the heavily regulated world that we live in. It should be far simpler, but it isn't that simple. And often it requires creation of a new vehicle that's a regulated vehicle, and you have to build out a slightly different business from the business that you're comfortable with.
Cool. So Dylan, maybe what have you found is the biggest barrier in your business model at the moment? So not necessarily when you started, but is it a distribution cost point? Is it a regulatory point? Is it product? What are the sort of big barriers that you're fighting?
I think, so actually, I'm just going to touch on this point before we move on, because I think it's interesting, because as everyone's going around saying, oh my God, Google could take you out, and Facebook could take the whole insurance company out. The reality is neither of those organizations want to be regulated, even with regards to media, which is quite low regulation compared to FCA. And so the reason they can do what they're doing is because they're not regulated. So if they were to start being regulated, it would be just an opening a can of worms from them, which would be just they don't want to be going there. So that's why I think when we have people kind of fearing the big data businesses, I think we're still a while away. Which actually slightly comes on to the point which I think, which you asked about, is I think the biggest challenge that most insurance tech, insurtech businesses are facing, it's not specific to us. It's just actually I think it's important to raise it because previously there was a flippant comment saying there was loads of capital. It was really easy. It's not. And I think the reality is there are very few investors who understand insurance and have got the confidence, therefore, to be able to invest. And so, in a way, I would argue that's probably the savior of the incumbents, is actually the lack of freely available capital. And I think there is a real gap between the angel and Series A space, where there is a real need for a lot more capital. So if there are kind of people who are wanting to invest and set up funds in insurance, that's certainly the segment you should be looking at, because I think there is you've got a great opportunity of actually getting great valuations at the same time. There's very little competition out there. So I think that's the biggest concern and issue, because frankly, regulation, it is what it is, but when you're doing what we're doing, actually it's not a problem, because we're completely aligned with the regulator, because we are delivering what consumers want. So we're not loggerheads with them, we're working together. In terms of distribution, listen, it's any business which actually is going to be consumer facing has to face the distribution considerations, and if you hadn't thought about it before you started, then you probably should have done, as you highlighted. And then in terms of everything else, yes, it's hard, but it's just put your nose to the grinding stone and just get on with it. But I think the only thing which is completely out of startups' control is actually the availability and appetite of capital. So I'd say that's I think the biggest concern. And actually, it's a much worse a problem in Europe than it is in the States. And I think in many ways, it's a bit sad, because in the UK, we are the insurance largest hub worldwide. And we've also got the most advanced distribution channels in consumer lines there is anywhere else in the world. And yet, we're lacking the amount of capital going towards startups that actually could really take advantage of our competitive edge. And in view of Brexit, that's definitely something we should be thinking of, because entrepreneurs will go towards the capital, and the capital's in the US. And I think Tim's probably had much less of a headache than most European startups setting up. A seed investment out there will be 2 million to start off with. But anyway, that's my take.
Tim, would you maybe like to comment on how easy it was for you to raise capital and how there are no problems doing a startup in the US?
It's hard to raise money everywhere, but it's raising money is difficult. But I think the biggest challenge is I see the bigger challenge on. I think we can innovate. We can probably, I'll say, innovate. We can innovate, and I think the incumbents have a challenge in innovating. The incumbents have scale, and we have a challenge scaling. And scaling means a lot, right? So if I pick Airbnb, I think they always quote they're in sort of more countries than there are countries. And so if you wanted to get into 190 countries, I think Allianz is in 68, and they've been going for like 150 years or something, right? So it becomes very difficult, Reinsurers like Munich have capacity everywhere, but you have to find distribution. And I think distribution scale, which is distribution, is really expensive, becomes I'm not saying it's not hard to raise money. It's hard to raise money, but distribution becomes the one thing that I think is going to, in the next 12 to 18 months, execution, things around net promoter score, as you talked about, being able to actually execute and to scale is going to separate a lot of the startups in the next 12 to 18 months.
Mm-hmm. Have you got anything to add, Fleming? On
yes,
a
couple of things. Totally agree on the funding point. One thing that everyone's got to understand is that it costs money to sell an insurance policy, right? Because you've got to be regulated. In Europe, the difference is that it works on the model where you already have traction, and then they give you money. So they say, how many customers do you have? And you say, well, I haven't got any customers because I need to get regulated first, which is why we're in the sandbox, and we're lucky to have the help of Chris and Jenny to get us started. The one thing that I would say, though, is that you don't have to just sell insurance. Distribution doesn't have to just be insurance. And we're certainly trying to sort of think outside of the box in terms of that. There's a lot of cross-sell opportunities that are not just insurance, be it a SaaS model, be it alone, who knows?
Yep. Cool. I just want to maybe move on to technology more than sort of customer-facing propositions now. Jenny, I've got one for you. So I guess when you look at a lot of propositions, actually none of the guys here on stage fall into this group, so I can say it. But a lot of people sort of say we're an AI-enabled something or other, or a blockchain-enabled something else. And they make a big song and dance about the sophisticated sounding technologies which sit behind what their proposition is. How excited do you get about people doing things with new sounding technologies, probably genuinely new technologies, versus what they're actually doing, if you see what I mean?
I get excited very easily, by the way. In fact, Slice was the first startup I met, and I got really excited by the tech, the proposition. For me, it's not just the tech, somehow it's also the proposition. Then when I moved to London, Slice, I was based in Canada back then, and when I moved to London, one of the first startups I met was Nimbla. And again, I got really excited by what they were planning to do, both with the tech and the proposition. I didn't mean Social, because Social was already a partner back then, and we had already started working with them. But for me, right now, I think tech is the way forward. Without tech, I don't think we'll be able to innovate the insurance industry as such. And I would like here to have a little say about the insurance industry. There's a lot of comment going on saying the insurance industry are not being innovative, or not really moving. And I have to say, I'm really passionate about insurance. I've always wanted to work in insurance, and I could be the only person who said I had a childhood dream to work in insurance. For me,
you're probably right.
For me, I believe insurance has always been innovative. Up to now, if you think, we wouldn't be able to launch satellites without insurance. We have created products to allow satellites to be launched. We have created insurance products to help people recover after all the hurricanes that are happening. So insurance has always been able to adapt to the needs of the market. And we are, again, adapting to the needs of the emerging economy, of everything else. But the technology is really allowing us to do it faster, or is pushing us to do it faster. And we have seen people say, oh, the insurance industry is very archaic. I can say Toys R Us, a big name like them, they are the latest victim of not keeping up with technology. So it's not only the insurance industry that are finding it hard to keep up. We are doing our best to keep up. And when we are partnering with these startups, for me, it is really making use of what is available out there. And what they are trying to make use of it is to be able to intelligently market insurance products to the customer. Nobody wants to hear about insurance, so we really need to only know about, for me as a customer, I would like to really be approached by an insurance company with an insurance product that I will need right now. So they need to use this technology, the artificial intelligence, to know who I am. And it is possible nowadays to know who I am. They know me. Google, Amazon know me more than I know myself. So they can really tell what type of products I need, when do I need it. So if they can target a product to me to say, I know you need this product right now, and I know the price you're willing to pay. So it has to be a product that I say I need at a price that I really don't need to think about it. The price is suitable to me. And with a convenience that allows me to say yes on the spot. I don't need to fill in any questions. I don't need to say anything because they know me. They have used whatever web scraping, whatever technology they have used, but a product that arrives on my screen, targeted to me by my personal circumstances at a price I'm able to pay, and with a convenience that's just a flick that I can say yes. So this is the future. And
I just want to pick up on this because there's an assumption that the consumer actually wants to be bombarded with insurance propositions at different points in their lives. The reality is, insurance has not earned the trust of the consumer to be kind of bombarded in any shape or form. I mean, if you look at people are happy to give their data to Google or Facebook because they've got a real service that's coming out of it, and they don't mind being having these pop-ups. Bear with them. In insurance, I don't think we're there yet. I think until we've actually regained the trust of consumers, it'll be really hard to have this vision that most insurance companies have of being engaging with their customers. Until you actually deliver on the absolute basics, absolutely really right, which is, I've got a claim, I'm paid out, I've got that peace of mind, then I think it's really hard.
So that might be true, but I'm going to rebuke you for not answering the question, which was to what extent you need sort of newfangled technologies to achieve that, or because you can achieve that sort of level of trust by, being a broker and not lying to your customer. But my point is that a lot of insurance startups are talking about blockchain and all of this stuff and kind of almost leading with that, even if they're not necessarily a blockchain proposition. And so the question is to what extent we should be excited about those technologies because they allow you to get to that point that you're describing, or actually whether that's all just noise because just doing the basics well is all you need to do.
I just think there's a real risk of actually the dog wagging, the tail wagging the dog. Technology should be enabling the kind of excellent service. It shouldn't be the kind of the be-all and end-all. It's just an enabler. It's not, and that's why I get, we adopt any technology that's going to be actually providing our customers with even better service and a better experience. We're completely agnostic. It doesn't matter what it is. We just find what's the best thing to actually make sure that we have a seamless experience. Starting with the technology does not actually lead to necessarily to the perfect kind of customer experience.
Yeah, the only thing I was going to add to the general discussion about this is brand, isn't it? It's building brand and building trust around your brand. And I guess that's where any startup has a real challenge, because you've got to build that trust in whatever it is you do. So the incumbents, those other big incumbents, whoever they are, even in the Amazon, Google world, have that brand presence and have a level of trust from us which a smaller business doesn't necessarily have. And I thought, coming back to again that earlier point about HSBC and the cash transfer around the world, I'm an HSBC customer, but I don't use them for moving money around Europe, which we do almost every week. But I do use one of those sites, but like TransferWise. But the problem is, you've still got to build the trust. And if HSBC had a cost-effective proposition to move money, I would probably be using HSBC. So I think there is something that can be done with incumbents, be it insurance or elsewhere, and that's often adopting technology and changing their business model. And then going off at a similar tangent, I think that's where Munich Re have done a great job in actually identifying a completely new business unit that can operate differently outside its core activity and build something around there. So I think that's an admirable way of working.
Cool. Tim, maybe one for you as well. So how have you used some of these new emerging technologies in your proposition?
There's a couple of different areas. I think, again, I think AI and data and algorithms is obviously critical, because if you're underwriting in a different way, then that's important, but a startup doesn't have enough data for it to really be impactful, and we don't have enough experience to know whether any of it works, any of those algorithms works. We just went through some hurricanes in the U.S., and we write business in both Texas and Florida, but you don't know, right? So on the front end, you're using it to sort of simplify the process. We're doing a sort of an interesting experiment, and I would say we're not at scale yet, but we've got a lot of users that like to go in every night and buy policies. Every night. They're Airbnb hosts, they like to go in, they pick their dates, they hit enter, they seem to just really enjoy the fact that they're buying it regularly every time they have a stay. It's part of the process. So not sure that all segments are not happy to engage with insurance. I think more and more, though, insurance will be embedded into the products. I want my Tesla replaced. I don't care that the insurance is purchased or not, but it's an interesting experiment. It's not at scale, but there are people that like it. But from a technology perspective, it's critical for one reason. I don't think technology is necessarily sustainable competitive advantage. It's key today because we're focused on customer engagement. We need it in the claim cycle. We need the technology. But 2 years from now, there's going to be new technology. And the stuff we're talking about now, people are going to go, really? So it's not sustainable, right? What's sustainable, we think is sustainable is building a digital insurer from scratch. And, not to get too controversial, but a lot of the expense is inside the carrier. You can't really squeeze it out of distribution because distribution is expensive, but you can squeeze it out of the carrier. So if you were going to take 30 or 40 cents out of the value chain, you would be squarely looking at the carrier, which has some issues because where are the jobs going to go and so forth. But if you created a digital insurer and you could perform at 30 to 40 cents less on every dollar, so that's like 1,000x improvement. That is sustainable competitive advantage. In the US, Geico and Progressive took Allstate from number 2 in auto to number 4, purely, in my opinion, both of those companies would disagree, on gross margin advantage, purely. Mm-hmm. So if you could use the technology, unfortunately, to remove all the fat and waste, then you have sustainable competitive advantage. The technology is to get to that, I think. That's our opinion.
And you possibly already touched on this point, but maybe I want to bring it to sort of a closing theme, which is what the market will look like in, say, call it 2030 or something. So long enough away that the trends will have played out, the trends we're seeing today will have played out. And so you've sort of referred to technology being embedded in the actual product, for example. So how do you sort of see the market structure looking in the future? How are people going to be buying insurance? Which companies are going to be the dominant ones? Are the incumbents all going to have been wiped out and replaced by a new generation of digital ones? Or how do you imagine it's going to look?
The incumbents have data, they have capability to underwrite, they have capacity, they have scale and capacity. We can work on one product. If they had our platform, they could probably work on 20 products. They could actually work quicker, but let's pick the Tesla, right? So time period 1, Tesla is like an iPhone with 4 wheels on it and a big screen, but if time period 1 is sitting in your driveway, time period 2, you're driving it, time period 3, it's driving itself, time period 4, it leaves and joins the fleet now and is going to go make money for you. I think that's the opportunity. I think obviously that's obvious that insurance, in my opinion, will be embedded. But the risks are very different. I mean, when the car is driving itself versus you're driving it versus it's off making money for you. But I think people just want, if there's a problem, they want their Tesla replaced. They don't really want to. They're buying the car, not the insurance. We think it'll be more embedded in the future.
And you're not allowed to say Munich Re as the answer to this question because you have you'll get hit. But who will be providing the products in those embedded products? Is it going to be
whoever has
the
data to underwrite it and price it properly? Capital will probably continue to be. I mean, Google's got the capital, Facebook's got the capital, Munich Re's got lots of capital, but whoever, at the end of the day, if I have more data, if I issue a policy every day on a driver, Uber driver, Airbnb host, what's valuable a year from now is I have 365 million data points, and I can price it and underwrite it. Because if you have capital, if you don't have the data, then I don't think you're going to be able to, and that's a benefit that Munich has. They can take on some risks that others don't because they have more access to the data. I think the data is going to be, whoever owns the data is going to be the critical piece.
Fleming?
Yes, I agree entirely with that. I think that data is exactly the answer, really. I mean, I think all of the technologies that you discussed in your previous question, that is what they have in common, really. And it's the application of the technology that really makes the difference. You can do it just for fun and kicks, and you may discover something, but ultimately it's about the application of that. Machine learning, I mean, we use machine learning, but if I'm perfectly honest, we were using very similar techniques in the banking world, for years. It's moved on incrementally. It's a buzzword, and it probably comes back to one of the earlier points, which is it probably helps you get funded.
Yeah. Jennifer, are you going to be the ones who have the data, or are you going to have data in certain pockets? And how are you going to fill that gap?
Well, Data is a big question for us. Of course, everybody's thirsty for data, so are we. And I think the reason why we are doing what we're doing with all the InsurTech is to have even an enriched source of data. Before, we were quite removed from the customers. We never, as a reinsurer, for those who don't know Munich Re, we are a reinsurer, so we insure the likes of Admiral, AXA, RSA. So we never really knew what the customers needed, or we never really got to the detail about how customers are reacting to products. So now getting the data, for me, it is allowing the role of a reinsurer to be even more proactive. We understand what the market is needing, and this is the role of a reinsurer, is to create products for the future. So now that we have access to the data and we have all the tech to analyze and to see what is required for the emerging needs, for us, that's what Munich Re is right clever, is we are going to the bottom of things. The most important thing for anything is the customer, and we are now getting data straight from a customer.
Yep.
I suppose my view is actually in 20 years' time, maybe the insurance industry would only be 5 years behind the rest of the other industries in terms of technology, rather than 20. But more realistically, I think there is going to be a shortening of the value chain of insurance. There will be more embedded aspects of it, but it's going to be differentiated deeply on the customer experience. And insurers who think that it takes 2 weeks to put you right after a household claim is all okay, considering that Amazon delivers you something the next day, just is a complete anathema for the consumer. And so I think the insurance companies which don't evolve and don't embrace and adopt technology to better serve customers, I think they're the ones who will be left on the sidelines.
Yeah, and lastly, the only thing I'd highlight is I think the embedded product point is fundamental. I think everything that changes in our life today, it can easily have an insurance added into it. So I think a lot of the businesses that I'm seeing are those that have an embedded product offering, which I'm sure will happen in the future. And the other thing I think structurally as a financial industry point, I think the deployment of capital into that primary insurance market, which will be completely hidden from any consumer, will change. So not just Munich Re as a reinsurer, but other capital markets will get their capital into the bottom end of the chain a lot more effectively in the future. But as I say, that's pretty irrelevant to anyone other than those in the financial industry.
And in under 5 seconds, do you think the existing incumbents will still be around?
Yeah, that's a good point. I mean, I think, unfortunately, yes, they will. I'd rather they weren't, to be frank, but I think they will.
Good. Thank you very much to everyone. Very interesting discussion.